Hold on to your hats because Nvidia just dropped a bombshell. The tech giant announced a massive $50 billion stock buyback program. That's right, $50 billion. This means Nvidia plans to buy back its own shares from the market. This news sent shockwaves through Wall Street and got everyone talking. Is this a stroke of genius or a desperate move? Nvidia is a big player in the tech world, known for its powerful graphics processing units or GPUs. These GPUs are the brains behind everything from gaming computers to artificial intelligence. Nvidia has been on a roll lately, with its stock price soaring to new heights. The company's chips are in high demand and its future looks bright. But this buyback program raises some eyebrows. Why would a company buy back its own stock? Is it a sign of confidence or a red flag? We'll dive deep into this question and explore all angles. Get ready for a wild ride as we unravel the mystery behind Nvidia's $50 billion buyback. Many people know Nvidia for its powerful GPUs that make your games look amazing. But Nvidia is more than just a chip maker. It's a tech powerhouse with its fingers in many pies. Nvidia's secret weapon is its diverse portfolio. First, let's talk about software. Nvidia develops cutting-edge software that works hand-in-hand with its GPUs. This software is essential for things like AI development and data analysis. It's like the brains behind the brawn of the GPUs. Next, we have Nvidia's systems. These are complete hardware and software solutions designed for specific industries. For example, Nvidia has systems for self-driving cars and healthcare. These systems combine Nvidia's powerful GPUs with its specialized software to create game-changing solutions. And let's not forget about services. Nvidia offers cloud-based services that allow businesses to access its powerful computing resources without having to buy expensive hardware. This is a huge market, and Nvidia is a major player. So next time you hear Nvidia, don't just think about chips, think about the software, systems, and services that make Nvidia a true tech giant. Let's talk about this massive stock buyback. Companies buy back their own stock for a few reasons. One reason is they believe their stock is undervalued. It's like saying, hey, our stock is a steal at this price. This shows confidence in the company's future. Another reason is to boost earnings per share, or EPS. Fewer shares mean higher EPS. But here's where it gets tricky. Some argue buybacks manipulate stock prices. They inflate demand and drive up the price. This benefits executives with stock options. So is Nvidia's buyback confidence or manipulation? It's hard to say for sure. It could be both. As investors, we must look at all angles and make informed decisions. Like any financial decision, stock buybacks have their pros and cons. Let's break it down. On the plus side, buybacks can increase shareholder value. When a company buys back shares, it reduces the number of shares outstanding. This means that each remaining share represents a larger ownership stake in the company. Buybacks can also be a way for companies to return value to shareholders. Instead of paying dividends, companies can use their profits to buy back shares, which can increase the value of the remaining shares. But there are also potential downsides. Some critics argue that buybacks can come at the expense of investments in research and development, capital expenditures, or even employee compensation. They argue that companies should focus on growing their businesses instead of manipulating their stock price. Another concern is that buybacks can be poorly timed. If a company buys back its stock when it's overpriced, it's essentially wasting money. On the other hand, if the stock price drops after a buyback, the company could have saved money by buying back shares later at a lower price. Section 5. Nvidia's future. Will it soar or stumble? Now for the million-dollar question, what's next for Nvidia? The company has been on a tear lately, but can it keep up the momentum? The good news is that Nvidia is firing on all cylinders. Its gaming business is booming, and its data center business is growing like a weed. Nvidia's chips are essential for AI, and AI is eating the world. This puts Nvidia in the driver's seat for the next wave of technological innovation. But there are also challenges ahead. The competition is heating up, with companies like Intel and AMD gunning for Nvidia's market share. The global chip shortage has also created uncertainty in the industry. And then there's the macroeconomic environment. Inflation, rising interest rates, and geopolitical tensions could all weigh on Nvidia's growth prospects. So, will Nvidia's future be bright or bleak? The answer, as always, is it depends. Nvidia has a lot going for it, but it's not invincible. Investors should keep a close eye on the company's performance, the competitive landscape, and the broader economic outlook. Section 6. The bottom line. What does it all mean for you? Nvidia's $50 billion buyback program has sparked excitement and debate, but what does it mean for you, the investor? Investing is a marathon, not a sprint. Avoid rash decisions based on short-term news. Do your research and make informed choices. If you believe in Nvidia's growth, this buyback is a positive sign. It shows the company's confidence in its future. However, consider potential downsides like reduced growth investment. Ultimately, the decision to invest in Nvidia is personal. Section 7. Nvidia's Dominance, the AI powerhouse. Let's zoom in on Nvidia's strengths, particularly its dominance in the world of AI. You see, AI needs a massive amount of computing power to crunch data and learn. That's where Nvidia's GPUs come in. They're like the engines that power AI applications. Think of it like this. Training an AI model is like teaching a kid to ride a bike. You need patience, the right tools, and a powerful engine to keep things moving. Nvidia provides those powerful engines with its GPUs. From self-driving cars to medical diagnosis, Nvidia's AI technology is everywhere. Companies are lining up to get their hands on Nvidia's GPUs to power their AI initiatives. This gives Nvidia a significant advantage in a rapidly growing market. And Nvidia isn't resting on its laurels. It's constantly innovating and pushing the boundaries of AI technology. This relentless pursuit of innovation keeps Nvidia ahead of the pack and solidifies its position as an AI powerhouse. Section 8. The competition heats up. Can Nvidia stay ahead? While Nvidia enjoys a comfortable lead in the AI race, the competition is heating up. Other chipmakers like Intel and AMD are investing heavily in their own AI capabilities. They're like hungry challengers trying to steal Nvidia's crown. Intel, with its vast resources and manufacturing prowess, is a formidable opponent. AMD, under the leadership of its visionary CEO, Lisa Su, is also making significant strides in AI. This competition is good news for consumers as it drives innovation and lowers prices. However, it also means that Nvidia can't afford to become complacent. It needs to keep innovating and delivering cutting-edge products to stay ahead of the pack. Nvidia has a history of outmaneuvering its rivals, but the AI chip market is still evolving, and the rules of the game can change quickly. It will be fascinating to see how this rivalry plays out in the coming years. Section 9. The Global Chip Race, a new era of innovation. Nvidia's story is part of a much larger narrative, the global race for chip supremacy. Chips are the building blocks of the modern world, powering everything from smartphones to supercomputers. The United States and China are locked in a fierce battle for dominance in the semiconductor industry. This rivalry has geopolitical implications and is shaping the future of technology. Governments around the world are pouring billions of dollars into supporting their domestic chip industries. They recognize that control over this critical technology is essential for economic competitiveness and national security. Nvidia, with its leading-edge technology, is a key player in this global chip race. Its success or failure has implications not just for the company but for the entire tech industry and beyond. Section 10. Investing in the future, is Nvidia right for you? Now back to the original question, is Nvidia a good investment? It's a tough one, even for seasoned investors like yours truly. On one hand, Nvidia has a lot going for it, a dominant position in AI, a strong track record of innovation and a large and growing market. It's like a thoroughbred racehorse with a proven track record. On the other hand, it faces stiff competition, a cyclical industry, and macroeconomic uncertainties. It's like a race with no clear finish line. Ultimately, the decision to invest in Nvidia depends on your individual circumstances, risk tolerance, and investment goals. If you're looking for a high-growth, high-risk investment with the potential for big rewards, Nvidia might be a good fit. However, if you prefer more stable, less volatile investments, there might be better options out there. Remember, diversification is key. Don't put all your eggs in one basket, even if that basket is filled with Nvidia chips. Section 11, Conclusion, the Nvidia story continues. So there you have it, folks. Nvidia's $50 billion buyback is just the latest chapter in the company's fascinating story. It's a story of innovation, competition, and the relentless pursuit of technological advancement. Whether this buyback turns out to be a stroke of genius or a costly mistake remains to be seen, but one thing's for sure, Nvidia will continue to make headlines and shape the future of technology for years to come. And as investors, we'll be watching closely, ready to capitalize on the opportunities and navigate the challenges that lie ahead. Stay tuned because the Nvidia story is far from over.